Hi. In this video, we will be seeing the role of Reserve Bank of India in India. We have seen in the previous video about various types of banks and RBI as a regulator. But now in this video, I will give the link of the previous video in the description. You can go through that. In this video, specifically, we will see the role of Reserve Bank of India. It was formed by 5 crore wholly owned by the government of India. It has one director and one governor and 4 deputy governors, and it is allowed to have 15 directors for control of the central control of the bank. So majorly, Reserve Bank of India carries totally 12 functions, 8 plus 4. 4 is added subsequently, so totally 8 functions. So what are those 8 functions? We are all aware that Reserve Bank of India works as note issuing authority. So number 1 is the note issuing authority. Then it is bankers to the government. It applies to both central government as well as state government. Number 3, it is bankers bank. And for your information, public cannot hold any operative account in Reserve Bank of India. So this is for your information. Number 4, Reserve Bank of India is acting as a lender of last resort. So that we will see how they are working in that fashion. Point number 5, it is controller of credit. You would have heard about CRR, cash reserve ratio, and SLR, statutory liquidity ratio. So this forms part of credit control. And then we have 6th point, to undertake transactions in foreign exchange. This we are all aware. 7th one is collection of credit information. And the last one as a major role is regulatory and supervisory functions. Under that, it can issue licensing to banking operations, permission to open branches, power to inspect the banks, power to issue directions, control over the top management of various banks, power to supersede board of directors, then inspect associate enterprises of banking companies, power to regulate acquisition of shares of a banking company and to raise ceiling on voting rights, power to grant licensing to various primary cooperative societies. So these are the 12 functions which RBI majorly does. Let us briefly look into these aspects of the role of Reserve Bank of India. So how the note issuing authority, see 1 rupee coin and 1 rupee note, you are all aware that is being issued by Mint, Government of India. That is not being given by Reserve Bank of India. So other than currencies which are more than 1 rupee note is being circulated, printed by Reserve Bank of India. And then they issue all these against the securities that are gold coins and bullions, foreign securities, then Government of India rupee securities, bill of exchange, promissory note payable in India. So these are the base on which the currencies get printed. So this is kept as underlying security. Gold coins and bullion shall not at any time will be less than 115 crore and not less than 200 crore of foreign securities. So this is the holdings which RBI always has. RBI also has various currency chests across all the places. So currency chest which is attached to various banks belong to Reserve Bank of India. They have been maintained by the regulator. If the payments of a bank on a particular day exceeds its own balance, it can immediately withdraw from the chest. And the reverse, likewise, if the funds are in surplus, the banks can deposit back into currency chest. So this function is allowed by the banks that is owning the currency chest on behalf of Reserve Bank of India. So Reserve Bank of India, as we told, acts as a banker to the government for central and state governments. Issue of new loans on behalf of government is also undertaken by Reserve Bank of India. Auctions for the treasury bills and government dated securities are issued by it on behalf of the government. So Reserve Bank as bankers bank. How will it be bankers bank? To all commercial, cooperative, regional, rural banks, the relationship is established when the name of the bank is included in the second schedule of the Reserve Bank of India Act 1934. So the category of the scheduled banks, this we have already seen, as I told you: commercial banks, public sector banks, state cooperative banks, urban cooperative banks and regional rural banks. Lender of the last resort. Rediscounting or purchase of eligible bills. Then loans and advances against certain securities. So this is how it lends to the various banks. So the bills is commercial bill, bills for financing agricultural operations, financing cottage and small scale industries, bills for holding or trading in government securities, a foreign bill, that is the export of goods from India. So this, which is having a maturity of 180 days. These are all discounted and funds are given to the banks. RBI may make any scheduled bank or state cooperative bank loan and advances repayable on demand or any on the expiry of the fixed period, not exceeding 180 days, against the promised notes of such bank. So that this way, Reserve Bank of India issues money to the banks that are in need. Controller of credit. So we already said about CRR and SLR. The current CRR is 4%, SLR is 18%. So what is CRR? To keep the cash reserve with RBI under the statutory cash reserve ratio of its demand and time liabilities. So total demand and time liabilities of a bank should be kept in the form of cash with Reserve Bank of India, and that is currently pegged at 4%. So this is CRR. And then what is SLR? To maintain on the net demand and time liabilities in India in the form of cash, gold or unencumbered approved securities. So this is SLR. So CRR should be maintained in cash form and SLR can be maintained in these three forms: cash, gold or unencumbered approved securities. So this is 18% now and CRR is 4%. Then salary credit control. Credit control also RBI does. Under that, it's authorized to direct directives to any bank on the banking system, the purpose for which the loan has to be given, and then the margins to be kept on these kind of loans, the maximum amount of advances that can be given to any specific industry, the rate of interest that can be charged by the banks. So there is a cap on all these things that is being decided by Reserve Bank of India. So bank rate. What is bank rate? This is this is also coming under credit control. Bank rate is the rate at which Reserve Bank of India grants loans to the commercial banks and rediscounts the bill of exchange. This is called bank rate. So there is one more facility that RBI gives called LAF, Liquidity Adjustment Facility, to provide short-term liquidity to banks and also to absorb excess liquidity in the system. This is called repo and reverse repo. So reverse, how does a repo work? Commercial banks which are in need of funds for a short period bid for funds under this scheme. Funds are made available to them by way of purchase of approved securities by the Reserve Bank of India. Okay, let us go to the reverse of it. Reverse repo is when the commercial banks possess excess liquidity, say they have more funds and they want to give it to RBI under nominal rate of interest. They want to earn income on that. In that case, this liquidity is absorbed conducting the reverse repo auctions, under which Reserve Bank sells the approved securities to the banks with commitment to repurchase the same after a specific period. This is called the reverse repo. So it also has permission to transact in foreign exchange. Section 40 of the Reserve Bank of India speaks about it. Authorizes the Reserve Bank of India to undertake transactions in foreign exchange. Okay. The seventh activity is collection of credit information. RBI has the right to collect information on credits from various banks, which is given to various sectors of the industry. So it can have the control on the percentage of security exposure that can be for a specific industry. Say for example, real estate, if government feels, RBI feels is under exponential growth or having higher exposure by the banks, so it will keep a cap, like the banks, in case they are giving 100% of the loan to the various sectors like cement, iron and steel, aluminium. So in that case, the exposure to the real estate can be capped to say 20% of the entire 100% loan. So RBI can give directives in this to the banks. So the regulatory and the supervisory functions, that is giving license to the bank under Section 22 of Banking Regulation Act 1949. So to hold license from the Reserve Bank of India to carry the business of banking activity, and with a commitment to pay the current and future depositors in full whatever the amount is being given to the bank, and not being or not likely to be conducted in a manner detrimental to the interest of its present or future depositors. So bank should always act in the interest of the depositors, and it should not act in a prejudiced and going against the public interest. So these control mechanisms RBI is asking banks to follow. Permission to open branches. So Reserve Bank of India gives prior permission to open new branches for the banks in India. So this approval is given once in a year, and then that needs to be fulfilled by the banks. Power, and as we told, it has power to inspect banking companies at any given point in time on a surprise manner also. And it can issue directives, control over the top management, and some additional powers are given to Reserve Bank of India, that it can supersede board of directors of banking companies, it can inspect associate enterprises of banking companies, and powers to regulate acquisition of shares of banking company and grant license to private cooperative banks. So these are the additional powers that are given. For financial supervision purpose, Reserve Bank of India is conducting off-site surveillance, on-site inspection, monitoring of the asset quality, capital adequacy measures, and other prudential norms of banks. Extending the task of supervision to strengthen internal control, management information system, and fraud monitoring procedures within the above mentioned institutions are also controlled by Reserve Bank of India. So what are the promotional functions which being done? So through Industrial Development Bank of India (IDBI) and National Housing Bank (NHB), they were set up wholly owned subsidiary of RBI. Provided guidance, help, and directions to the banks. Reserve Bank of India has laid down prudential norms, credit exposure norms for improving the functioning of banks and other financial institutions. To improve customer service in the bank, you are all aware the Goiparia committee recommendations were there, and it also has BCSBI, Banking Codes and Standard Board of India, that gives directives and code of conduct for banks to commitment to the customers. RBI has taken initiative in developing training facilities for bank employees of other banks as well as their own. So there are 5 questions that are there. I thought I can share with you, and we can find out which option can come in that. The minimum aggregate value of gold coins and bullion and foreign securities to be held by the issue department of Reserve Bank of India should be how much? A. 100 crore, B. 115 crore, C. 200 crore, D. 250 crore. So what is the amount that we have discussed earlier? It should be C. 200 crore. You would have heard about that. Then question number 2. Reserve Bank of India holds 100% shares in A. SBI, B. National Housing Bank, C. IDBI, and D. Exim Bank. The answer is National Housing Bank. RBI holds 100% in National Housing Bank. RBI does not act as, so we have discussed various functions RBI does. and in that, which one is the following is not true? It acts as an agent, B, an advisor, C, banker, D, an auditor to the central government. Yeah, so by now the answer would be clear to you. It is not acting as an auditor to central government. Last two questions. The bills arising one of exports of goods from India must have the maturity of not more than how many days? Is it 90 days, 120 days, 180 days, 240 days? We discussed this a little earlier. The answer is 180 days. The last question. The amount of cash reserve maintained by scheduled commercial banks with RBI is determined on the basis of what? A, total asset, B, total owned funds, C, total interbank borrowing. The last one is total demand and time liabilities. Yes, the answer is correct. D, total demand and time liabilities. So this is so interesting about the Reserve Bank of India. In these 15 minutes observation, you would have learnt a lot about RBI's function, and there are many more which RBI is doing. I only gave snippets of what the role RBI is playing. Kindly share this video to commerce finance students of degree course, post-graduation and MBAs as well. And please share it to young bankers who should know their regulator, what RBI does for the banks. Thank you very much for patiently watching, and enjoy with me in the next video. Bye.